Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 16 of the Forex market review. Today we're going to look at two pairs, being the AUDUSD and the Pound Aussie. Today's going to be an Aussie day. So here we are starting on the Aussie USD. As you can see, top left corner, we're on the Aussie USD, the daily chart. And the reason why we're starting on the daily chart today is we have our first large AO down the bottom here, which we know is likely wave 3. Sometimes you can start on the monthly and weekly and work your way down. That's the best way to go. But we're just going to start straight on the daily. We're going to grab our Fibonacci retracement tool. We do from the lows to the highs, so that's pretty much the start of the wave 3. So if we look at the start, it's roughly around here, so we work our way up. So that's likely wave 1, back for 2, up for 3, and all the way back to the zero line. Now because this hasn't come to the zero line just yet, it's still not ended, and we have to wait till the AO comes back below this zero line, which is this imaginary line right in the middle, before we can determine that wave 3 as ended. In the past, we might have talked about this point being wave 3 ending, and there'll be lots of reasons why that may have occurred, and we won't know but until we see it get back to the zero line. So that's the key. Until we see the AO back to the zero line, wave 3 hasn't technically ended. Now with the pullback for wave 4, we want to see it come back to around about the 50% Fibonacci area. We go ahead, grab our tool, drop it on the 50% level. What we can see looking left, it's bounced here, and bounced here. So this 50% mark is a very good area of strong support. The reason why we say that's going to be support, because support is like the floor of in your house. It's going to come down, probably bounce up, come down, and bounce back higher around these levels here. This ceiling or the resistance area is like your roof, where it comes up, hits resistance or hits the roof, comes back down, finds that support, the floor, goes back up, hits resistance, and so on. Once it breaks resistance, previous resistance becomes support. So if you're looking for a pullback and an entry higher, this area around 74 will be a very good area to trade. So what we need to do now is we'll go ahead and grab our vertical tool, and we need to determine how many wave cycles we've had in this last move higher. So if we believe this is wave 3, on the lower time frame we should see 5 wave move higher. So drop down to the 4-hour chart. First thing that jumps to our head is this large AO here, which identifies wave 3. So with this AO back to the zero line, as you can see it's come back below the zero line, we can determine that this is wave 3, pull back for wave 4, and the wave 5 higher, breaking to new highs and giving us divergence with a higher high in price and a lower AO. That would have been the first point we would have thought to ourselves, that it's likely the 5 wave move on the 4-hour chart is ending our wave 3. But because the daily never came back to the zero line, we still could be in a wave 3, and this is proving that we are. So this is just now an overextension of the 5 wave move on the 4-hour chart. We could probably class this as wave 1, down for wave 2, up for wave 3. So it's very likely we might have a tiny bit pushed back higher before we see it come off. But how much higher? Well, we look left, and as we can see, we see resistance. So if resistance is like the roof, we expect to come up here, bounce around this area, and then pull back lower. So if you're a gambling person and you wanted to take a trade short, then up in these areas would be a suggestion. Remember, these are only suggestions. You need to follow your own trading plan and seek your own professional advice. This is just pointing out my views of what I like to trade. So you could take an assessment there using previous resistance and say to yourself, well, I want to come down to these levels here to where the support is like to be. So if I'm going to try to make 400 points, let me put my stop loss roughly up at these resistance areas, risking 200 to make 400 pips, which is risking 1 to 2. So if you're going to risk that 100 bucks, you got a good chance of making $200 down to these levels here. Dropping down to time frames even lower, we can see that it probably likely, this is wave 3, going to come back for wave 4 and push its way back higher. So we still could see that tiny move back higher, getting ready to do its wave 4 on the daily chart, all the way back down to these areas here. But as we moved up, there was some pattern trading you could have done. You could have looked at patterns around these areas here. So you've got your first point here, up to here, and back down to here. And then you've got your second leg there to there. So that's likely a bat pattern, and to determine that, we use our Fibonacci retracement tool. We go from the lows to the highs. We can see it's come back to the 50% mark. Therefore, the leg extension should be at the 88.6, which it has. And if you entered the trade there, you would have put your stop losses down here, or about 20 pips, and then you would have gone and taken the trade at least 20 pips down there and rode it up to these levels up here and made about 60 pips. So the way we determine which level we want to go to is, again, we use our Fibonacci tool, and we go from the lows to back to the highs, and we want to see it pull back to around 61.8. So we said we entered around here and we're looking about 60. Yep, perfect, 61.8. So you're risking 20 to make 60. That's risk 100 bucks to make 300, and that would have been a very good trade on a lower time scale using a bat pattern formation on the Aussie USD. At the moment, we don't have any setups occurring telling us to go short on a bat pattern. So we'll have to just look for that resistance area and a push back lower. Now let's look at the pound Aussie. As again, in the top left corner of my chart, we have the pound Aussie starting off the daily time frame. And the first thing we look for is the first largest AO. And as we can see, this is the large AO here. So it's likely we have our pullback lower. We do from the highs to the lows. So that's from roughly the start of the area around here for wave 3, all the way back until it gets to the zero line. Because it's not at the zero line yet, if this keeps falling, we'll just keep dragging the Fibonacci retracement tool down with it. Because it hasn't come back to the zero line until around here, you could even pull it back up to here and take the assessment that all of this could be wave 3. So this could be 1 up for 2, down for 3, or you could say this is 1 up for 2, down for 3. It's a here and there. It's very easily determined differently by different people, but I always like to say when you see it come back to the zero line, that's the clearest way to say where it might be. We then grab our 50% line, do a horizontal line at 50%, and you say to yourself, does that sort of match up? And it does. Looking left, we've got a bounce there, and around this level here. So anywhere between the 50% and the 61.8 is likely a good area it could reverse, and it matches up with this area where the DSR, the dynamic support and resistance indicator, has indicated us where it will be. So the pullback will be probably in an ABC motion, but again, until this comes back to zero line, we won't know that it's ended wave 3. Now, it may start moving up as this comes back. That is normal, but we want to wait till it crosses zero line and then look for an entry back lower for our wave 5 on the daily chart. Dropping down to the 4-hour chart, we can see this first large AO here and then a smaller one. So we can say that it's likely that we had divergence on the 4-hour chart with our lower low in price, and our higher AO coming back to zero, being clear divergence. It is also overextended, but until this comes back to zero line, we don't want to be going short again, and we want to be going short at the 50% mark. But if you're a gambling man like you may have been on the Aussie USD, you look left, so zoom out, and you say to yourself, well, I can see support here, here, here. So, you know, right around the levels we are now, maybe a good area to go short, and therefore you might want to gamble going short there. The reason why I say gamble is it's an educated gamble if you've used a lot of back testing and history, and you have to back test everything. Therefore, it's an educated gamble of where you think it would go. Therefore, you enter around these levels here. You probably put your stop losses about 500 pips lower, and you'd be going up to these levels here of about 1200. So we're looking at risking one to make over 2 to 2.5 times. So therefore, that's a good risk to reward. Always maximize your risk to reward, because that way, if you don't get it right all the time and you only get it right 40% of the time, it's very likely you'll still make money because the fact you're doing the right risk to reward. So let's drop down. We've seen the 4 hour. Let's drop down to the 1 hour chart, see where we're at. At the moment, we can't see divergence, but we don't always see divergence. But at the moment, it's not clear divergence, so it's very likely on the pound Aussie we could continue lower. And we look at sales and see, do we see any formations in the patterns? Well, we probably had one about here. So here's your left leg from there to there and back up again, and then from here to there and back up again. Where did it have to extend to? Well, you would go ahead and you'll grab your Fibonacci retracement tool. We use Fibonacci a lot in everything. Technically, this wouldn't be a bat pattern because you want to come back to the 38.2 or 50% to be a bat pattern. It only gained to 23.6. But if you did look at that one and you made a trade, you wouldn't want to get into the 88.6 area. So again, you want to get in around this area up here. And what you can do is jump into your indicators list. If you've got the DSR indicator, change it from the daily time frame to the hourly. So it says in minutes. So this time, instead of 1440, which is a day worth of minutes, we're going to do 60 minutes in an hour. And there with the resistance area. So it's very likely you probably would have said to yourself, okay, because this hasn't pulled back as far, I'm going to get in that little bit earlier. And because there's a resistance areas around here, you might have not rode it all the way up to there. You could have risked yourself something about 60 pips to make yourself about 120. And again, you just grab your tool, Fibonacci tool, and you just reverse it with the end of the leg to the beginning of the leg before the move started lower, and you want to come to the 61% mark. So we set around these levels, risking around 80 pips to the 61.8 level is 150, so around 160. So risking one to make two, that would have been another perfect trade. So thank you for that. That was week 16 of the Forex market review. I hope you enjoyed this session, and we wish you all the best in your success. Take care. Bye-bye.